If you're calling a lender before you know whether your deal actually cash flows, you're doing it backwards. I'm Luke Roasst. I'm a non-QM mortgage broker, and today I'm going to show you how to run a full DSCR analysis on any rental property in about 60 seconds for free. That way you can walk into any lender conversation or partner meeting and know exactly where you stand. Let's get into this. Real quick, DSCR stands for Debt Service Coverage Ratio. It is exactly how lenders decide whether a rental property can pay for itself. The math is simple. You take your monthly rent, you divide it by your total monthly expenses, which are your principal, your interest, your taxes, your insurance, and any HOA fee there might be. That number is your DSCR. Above a 1 means the rent covers the payment. Below a 1, you're coming out of pocket every month. Most lenders want to see at least a number 1. Others will go down as low as 0.75 or even 0, but there are some significant trade-offs. The higher your DSCR, the better your rate and the more leverage you get. Let me show you what this might look like on a hypothetical deal. Let's say you're shopping to purchase a single family home so that you can rent it out. Now, this one in particular is $350,000 that you found. In the current market for a qualified borrower, that will require 15% down payment, which would leave you with a loan amount of $297,500. Now, you think in the area for this single family home, you can fetch $2,800 a month. By the way, all these numbers can be changed. This calculator is online 24/7 and it's totally free to use. In the current market, the rate going right now is around 6.75% for a qualified applicant. And we're going to presume that this property, based on its value, has annual taxes of $4,000, and you can get an annual insurance policy for $2,400 a year. And lucky you, it is not located in an association, so you have zero dues. After those numbers are entered in, you immediately get a DSCR. And in this case, you can see that it's 1.14, which is above a number 1. And that means that your rent is covering all of your expenses and you have some room to spare. And here's something most calculators don't show you. The max loan amount based on your DSCR. At a 1 or better, any good lender will loan up to 85% of the purchase price, or up to 80% you can get as a cash out refinance. Now, that's real leverage. You're not putting 20% or 30% down to buy a property, and you're getting a lot of your equity out of it as a cash out. Further down in this calculator, you can see your monthly PITIA, all broken down. This is your principal, your interest, your taxes, and your insurance. And if there was an association, and you had something here, let's say $50 a month, you just add that in, and it'll get pushed over here, added to your monthly breakdown, and adjust your net cash flow automatically. But this has none, so we're going to put it back to 0. Now, what happens though if the appraisal comes in and the property is not currently rented and the appraiser says that the current market rent is only $2,200? Well, that's going to bring down your DSCR. And depending on how low it is, the calculator has a cute color coding system. So if it's below a 1, it goes to a yellow color. And if it's below a 0.75, it'll even go to red. Now, a lot of investors see this and they think the deal is dead, but it's not. Here's where it gets interesting. This calculator is built to actually show you automatically alternative strategies in order to qualify for the loan. So even if it's under a DSCR number 1, and these are real programs, by the way, real lenders offer them. This is not theoretical. If your DSCR falls below number 1, and here's what most brokers won't tell you, there are at least 2 other ways to get this deal done, often with the exact same leverage. Your plan B is asset depletion. If you have significant liquid assets like brokerage accounts, retirement funds, savings, a lender can use those assets to qualify you instead of the rental income, or in combination with the rental income, just to make up a gap to qualify you. And you still get a full 85% for a purchase. You still get a total 80% cash out for a refinance. It's exactly the same leverage. It's just a different qualification method. Also, Plan C is using either a bank statement or a profit and a loss statement. So if you're self-employed and you have strong business income, we can use 12 or even 24 months of bank statements to qualify for the loan, or a single page profit and loss statement prepared by your CPA or your tax person. Again, 85% purchase price, 80% cash out refi, all business purpose still. And here's the kicker: because it's business purpose, this mortgage doesn't show up on your personal credit report, and it won't affect your personal purchasing power for other things. The point is, a low DSCR does not kill a deal. Okay. And this is very important, especially if you're doing a cash out refinance. Not so much for a purchase, because you could also back out. But when you're trying to refinance, you want to get as much leverage as possible. So having alternative methods to qualify is very important. So DSCR, if it's low, it will not kill your deal. It just changes which program fits best. And that's exactly what I help investors figure out. Now, one more thing. You're doing this calculator, you're getting the results, and you need to carry them with you. So you can export all of this information as a branded PDF by clicking the Export PDF button. You can even add your information to it if you want to add branding to it, because if you're a realtor or a wholesaler or someone that works with people that want to buy properties, then you can do the calculations for them and share this with them as a tool, totally free. Also, if you are bilingual or prefer the Spanish language, you can hit the toggle up here. It'll translate the entire calculator into Spanish. It even presents the PDF that you export in the Spanish language. Totally up to you. Again, 24/7 online, free calculator, use it anytime. Now, here's the thing. You know your DSCR now, you know your max loan amount, you know whether you need Plan B or Plan Z. The calculator is telling you all of these things. But here's the thing. Every lender prices these deals differently. Different rate floors, different LTV caps, different prepayment penalties. That's where I come in. Right below the calculator, there's a button that says Get My Lender Fit Review. You click that, your scenario comes to me automatically, and I'll match your deal to the lender that gives you the best combination of rate, leverage, and terms. And there's no obligation to you. I just tell you where your deal fits best. I'm Luke Roasst. The calculator link is in the description. Go run your numbers. And if you want me to help you match you with the right lender, I'm only one click away. If this was helpful, subscribe. I break down deal math just like this and non-QM lending every week. See you on the next one.